we're all going through, and created this group, Thriving Through COVID. We kicked it off with a I guess a webinar, what we'd like to call it, I guess. Which basically just shares everything we knew, from the strategies and tips and literal, here's what you could say to your community right now. So people have the tools to just get acting quickly, even if you don't know much about social or PR, because we knew that, our own clients really were hungry for stories of all different ranges, from the positives to the negatives of that. So, we jumped on the phone straight away with our clients, and then we were sharing that with others of just what you could do to really get your story out there, of the impacts and that sort of thing. And, so the Facebook group sort of kicked off, and pretty much from there, it's just been a flood of amazing businesses coming together.
So what kind of industries are we talking about here?
So, Rach, do you want to give a little bit of an insight of some of the industries we've seen?
Yeah, sure. So, basically everything's represented. So from tourism and events to hospitality, food and beverage. So, in fact, last week we held our first Bring Your Vino event, which featured a premix cocktail, a brand out of Wellington. So that was really fascinating to hear the stories of, I guess the different situation that they're in and how that's affecting business over there. Accountants, business consultants, web development, IT.
It's such a broad range.
Yeah. The thing that's common with everyone is the business is generally quite small business owners, would you say, Katie?
Yeah, absolutely. They're really small business owners. Everyone in the group really has their own business, obviously. We wanted to bring people that are, may not have the benefit of a wider network as much. So, a big management team behind them. And, so a lot of them, they're different ranges too in sizes. So, some had 20 staff that they've had to reduce down to 1 or 2 staff members only now, and so others are just sole business owners, and so it's quite a big range. But there's people like we've had one from Sri Lanka who owns a hotel over or a new accommodation that was set up in Sri Lanka that's been impacted. We've had a fishing tourism company that's obviously gone, to zero in the recent, with COVID restrictions impacting all of their activities. There's just been so many and such interesting businesses, from cake, cafes and cake stores that have pivoted to trying to do, grab and go products now to help, continue to keep some money coming in. Others like, there's one girl called Ash Thalen who runs,
Ghazi and May.
Yes, that's right. And she imports, Ghazi and May import handmade products from India, and so obviously India is also in a complete lockdown as well, so she cannot get her products at all. So her business is also at a standstill. But there's also been others like Katina from Club Sandwich HR, who is actually really, I guess, thriving in the literal sense of being run off her feet, with needing to support her clients in transitioning them to the home office model, and also having those really challenging, tough conversations that, with reducing team sizes. So she is actually very busy. So there are those that are thriving literally with business, and there are those that are obviously having the significantly reduced effect of their business and gone the opposite way, had to close their doors. And so I guess why we called it Thriving Through COVID, it's not about necessarily thriving, cash flow. It's about the mental support that we need to keep everyone strong during this time, because it is, there is going to be something on the other side, whatever that will be. And I guess the biggest message we're trying to share is that as long as you keep your community strong, no matter what it was before, and you focus on supporting your community in that time through, sharing as much information to support your clients or your, I guess, target audiences in a marketing term, you're going to come out well on the other side. So yeah,
Yeah.
that's been the biggest common thread. We're hearing from everybody as well as what they're trying to do, and yeah, has been such a positive group in everybody sharing tips, everybody sharing the realities of what they're going through, but it's also about having a good laugh too. Like, we're sharing a lot of the memes that are going around just to stay positive, a lot of mental health tips of what they're doing to just find that daily boost of motivation, whether it's having a dance with your favorite music or something to stay productive during the day.
Yeah. I think a lot of people have taken this opportunity to learn new skills as well. That's really been a common thread. Taking the time to pause and kind of think about, the areas, I guess, that maybe they weren't able to, or those projects that they weren't able to get to, while they were kind of in the day-to-day grind. Now there is this opportunity to kind of, get on top of all those things that were on the to-do list for so long. So I'm just thinking of, a couple of people like Luke Dean, who is an events director, and he's worked with some incredible brands like Mecca, for their Mecca Land pop-up, which was a huge success, and Vogue and Myer, and, obviously the retail industry was hit very hard. So he's taking time now to kind of, focus on his health and, focus on self-development and things like that. And yeah, just waiting for his next project. So that's definitely been a theme too, don't you think, Katie?
Yeah, absolutely. It's been, I think I guess the most inspiring part of it all is that while our businesses have been majorly impacted the revenue's not coming in, it's been an amazing opportunity to literally, as Rach said, pause and just reflect on what actually is important in your business. Have you just been chasing the hard dollars, the quick dollars, I guess, at the end of the day, rather than why, coming back to your why in business, which is such a typical term in business, but it is really important. It gives you time to reflect on that. And I guess myself as a business owner, why I got into business is so I could have more time with my family and have a business that gives me that flexibility. And COVID really has given me that opportunity. It's to actually have time to be a mum and not just, do the daily grind of work, but have a bit more of a balance. What's that?
And the hustle, that was such a word that was thrown around, there was this kind of crazy expectation to go beyond even the 9 to 5 and have like side projects and things like this. And I think it's really kind of brought people back to a sense of, hang on a second. What is
actually important?
Yeah. What's important. Yeah.
Well, that's quite extraordinary. And of course, Rachel, you're based on the Sunshine Coast, and Katie, you're in Brisbane. Yes. So it's quite extraordinary that you guys have brought together this community. And well done. And wishing you all the best, and hoping you get through this. And I know you guys will get through this.
Absolutely.
And wishing you all the best, and thank you very much for your time.
Thanks, Leon. Really appreciate the opportunity.
Yeah. And now let's talk to CommSec Chief Economist Craig James.
Well, Craig James, what's your view of the market's developments this week?
Well, it's going to be an interesting week. There's the usual Bureau of Statistics, sort of got a whole range of special new surveys which they introduced, sort of a number of weeks ago, so we can monitor the impact of COVID on the economy. So things like, so the June travel stats or statistics which are coming out on Tuesday. So very, very much up-to-date readings in terms of arrivals and departures, in the country. We have the weekly payroll data. Again, a relatively new indicator that the Bureau of Statistics has come up with. That's coming out on Tuesday as well. And Commonwealth Bank has got the house spending. Yes, every week the Commonwealth Bank looks at debit and credit card transactions, and those figures are coming out, on Tuesday. That's the latest read, basically, on spending across the economy. So nowadays, if the data is more than, sort of a month old, well, basically people, don't want to know about it. They want to know what's happened, sort of not just in the last, month, what's happened, in the last week. If we look across the data, though, there's two standouts in terms of the economic data. It's the jobs figures that come out on Thursday, the all-important, sort of employment and unemployment, sort of figures. So those figures really stand out on Thursday. And the other thing that we'll be watching fairly closely is the National Australia Bank Business Survey, which comes out on Tuesday. So those reports or indicators have been around for some time, maybe a little bit lagging in terms of information, but still, this is very much the top echelon in terms of economic data across Australia.
Right, okay. So there'll be a lot to watch about how the pandemic is shaping the market.
Very much the case now. I suppose when we think about the economy, it's actually performed quite well, given the fact that we have had this once in 100 years pandemic. But because Australia has been very successful in terms of suppressing the virus in Australia, that's allowed lockdown restrictions to ease a lot earlier than what some expected. We've got to remember back when the virus was first taking hold, that the Reserve Bank thought it would be September before a lot of the lockdown restrictions would end. Now we're looking at right the way across the country, I suppose, except for Victoria, but right the way across the country, quite a number of the lockdown restrictions have already eased, and we're only in early July. So the fact that we're getting back to work, businesses are getting back to business, and employees are getting back to work is very much an encouraging sign. So we want to see some progress on that in terms of the National Australia Bank Business Survey. We do know that confidence levels really took a hit when we go back to the March reading. It was business confidence was down 65 points. The normal reading is a +5, and it was down by 65 points in March. It improved in April to -45, and then in May to -20. So we'd like to see further continuation of an improvement in business confidence. Business conditions have remained weak as well. -22 was that reading back in March, and then -33 in April. But there was signs of improvement of that in May -24. So the readings certainly will be watched very, very closely.
That'll be fascinating to watch. And what's your assessment? So where do you think it'll be tracked?
I think we're going to get close back towards the zero line now. Business conditions still remain quite weak. I mean, while the lockdown restrictions are ending, it's not as if the economy is jumping back in a big way. It's a slow, considered improvement in terms of the economy. So we'd like to see the business confidence continue to improve, and certainly an improvement in business conditions. The one thing that will hold this survey back somewhat is the fact that we've been doing right, across the country, to places like New South Wales and Queensland and the like. But this setback that we've had in Victoria certainly may affect the readings on business confidence and conditions. And it'll be very, very interesting to look closely at the state figures for these readings, to be able to see if there is any marked difference between the Victorian readings and the rest of the country.
That'll be fascinating to watch. And of course, there's no telling that whether the pandemic from Victoria might spread to other states as well. I mean, they're on watch as well.
Yeah, this is very much a case that we've got to be very much alert and alarmed. So this stage. So we need to make sure that we do everything to make sure that we don't have the Victorian situation spreading to other parts of Australia. Already we've seen one case emerge in Northern Territory after around about 60 odd days where they had nothing. We don't want to see some community transmissions in New South Wales as well, because we had been getting on top of that. And places like Queensland, South Australia, Tasmania and West Australia have been doing very well. They're effectively down to zero in the ACT. So we have been, by and large, except for the fresh issues in Victoria, been doing very, very well. And we need to continue to do that, because the economic prospects really rely on how well we're doing in terms of the ability to suppress the virus across Australia.
Right, okay. And are there any figures from overseas we should be watching out from overseas markets?
If we're looking at the overseas markets, so what stands out for us is on Thursday, it's the Chinese GDP figures. So they're usually one of the first countries to kick off the ball in terms of the new quarter. So we'll have the June quarter figures in terms of Chinese GDP. So we'll see how quickly that economy is bouncing back. We'll also have the usual monthly readings on production, investment and retail spending. So certainly, given the fact that China is our major trading partner, I suppose China's almost everyone's major trading partner, but it's our major trading partner in a big way. Something like 38% of our exports to go to China, and it's dominated by iron ore. So very much in our interest to be able to see how that Chinese economy is going. So Thursday really stands out in terms of that data. In terms of the United States, less of a focus. Usually we have a big focus in the United States, but on Tuesday we've got the Consumer Price Index measure of inflation. Inflation's not a biggie in terms of what people are worrying about at the moment. Probably more important is in terms of Wednesday, the production figures. So we'll have industrial production figures out of the United States. Thursday, we have retail spending and the Beige Book, which is a summary of economic conditions across the Federal Reserve districts. And then on Friday, we have housing starts. So in the United States, yes, the production and retail trade figures just show how quickly the US economy is getting back to normal. It's going to take a little bit longer because they're having troubles in suppressing the virus in quite a number of states in the United States. China, there has been some encouraging figures of late, particularly in terms of industrial profits and also the Purchasing Managers Index for manufacturing services have been doing a little bit better. So we'll be very keenly watching those figures coming out on Thursday in terms of China GDP. Of course, that will occur on the same day that our jobs data is coming out. The jobs data right the way across the globe is very, very, very volatile. It's very, very hard to forecast. So we're at the moment sitting back and trying to come up with our estimates. We haven't finalised our estimates in terms of those figures coming out on Thursday. But remembering what happened in May, almost 228,000 jobs were lost, and the unemployment rate ticked up to 7.1%. Our view is that the unemployment rate is likely to peak in Australia around about 8.4% sometime over the September quarter. And then if we look 12 months out, we'll probably be seeing the unemployment rate somewhere around about the current sorts of levels, around about 7 to 7.5% in 12 months' time.
Right. So when do you expect it to get round about the fives?
Yeah, I think it's going to take some time now. Of course, we've got to remember in terms of the our forecasting, it's a very, very volatile situation that we're in with COVID. And of course, we're seeing that represented a lot of volatility in terms of the economic data. So if anything, what we've seen in recent times is a surprise on the upside for a lot of these indicators. Unemployment in Australia, initially the Treasury and also the Reserve Bank were expecting that we could see 11, 12% unemployment. Well, we don't look as though we're going to get anywhere near that. And of course, a key reason for that is JobKeeper and JobSeeker. So certainly they've been very, very successful. And that was the aim. The aim was to ensure that people remain engaged with their workplace. They weren't separated, that they had that lifeline for a JobKeeper attaching the employees to the employers. And hopefully, in coming months, we'll see fewer and fewer people on JobKeeper, because for the simple reason that they've got back to their workplaces. And of course, the quicker that people get back to their workplaces, the less need we have for JobKeeper. And this whole debate about whether it should be extended or not will be resolved very, very easily.
Well, we'll watch that with a great deal of fascination. And Craig James, thank you very much for your time.
Not a problem, Liam. Thank you.
So what's happening in the news? Well, the closure of Victoria's borders risks slowing the national recovery from the coronavirus crisis, with the return to lockdowns across Melbourne also sapping business confidence. The sharp spike in infections has prompted a clampdown by businesses that were preparing for a return to work and normalised working conditions in line with other states. But Melbourne's central business district remains a relative ghost town, with some landlords ready for tighter restrictions. Business leaders warn the initial limited impact on supply chains could be compounded by a hit to business confidence, as the city is dotted with empty office buildings, with occupancy running as low as 10%. Companies may also push work into other states that are not caught by border restrictions, with Sydney and Brisbane positioning for work. Melbourne business leaders express concerns about the longer-term economic impact of the pandemic and associated lockdowns. And Prime Minister Scott Morrison concedes jobs are at risk, while business reacted with alarm after New South Wales Premier Gladys Berejiklian ordered her state's border with Victoria to stop the spread of a fresh coronavirus outbreak. South Australian Premier Stephen Marshall, who until last week had been preparing to ease border controls on July the 20th, did not rule out following Ms Berejiklian's lead and shutting his state's border to Victorians. The ACT will also deny entry to Victorians without an exemption. Business groups warn the move to effectively isolate Victoria, which is responsible for about 25% of the nation's economic output, will further batter investment and consumer confidence. And credit and debit card data spending across Australia is up 12% on the same time last year, but reinstated COVID-19 restrictions in Victoria have kept its recovery lagging well behind the other states. The latest data from the Commonwealth Bank for the week to July the 3rd shows Tasmania and West Australia are leading the spending recovery, up 20% and 19% respectively on the same week last year. But the CBA card data shows Victoria's spending recovery is up only 5%, well behind all other states and territories, largely due to the reinstatement of restrictions and lockdowns imposed in some postcodes. And the Australian economy will bounce out of the coronavirus recession, but it will be a jobless turnaround, new forecast suggests, with real wages likely to fall until the middle of a decade and government debt to breach $1 trillion. Victoria's sharp rise in coronavirus cases over several weeks has put the entire Australian economic recovery at risk, a new report has warned. A Deloitte Access Economics Business Outlook report said the national economy would contract by 3% this year. Victoria is likely to be the worst performing state economy during the COVID-19 crisis, suffering prolonged misery, even as the national economy would recover more quickly than previously forecast. Written just as the outbreak in Victoria intensified, Deloitte Access Economics' latest quarter business outlook warns, if you can't beat back the virus, then you can't open up. While the Deloitte report assumes that the intensifying lockdown in Melbourne suburbs will suppress the virus outbreak of the past fortnight, it still predicts that Victoria's gross state product will contract 1.6% in real terms this financial year, the worst of all the states. As other states have worked towards opening their economies in recent weeks, Victoria, which makes up a quarter of the nation's GDP, has gone the opposite way by enforcing tough new lockdown measures. Deloitte Access Economics partner Chris Richardson said Victoria was more exposed to economic turmoil because of its dependence on migration and on foreign students in an age of lockdowns and closed borders. The firm expects unemployment to average 8.2% in the current financial year. Even by 2024-25, Deloitte is forecasting the jobless rate to still be above its pre-virus low of 5.1%. Wage growth is tipped to lag inflation out to 2024-25, with full-time employment to grow slower than part-time jobs for several years. Over the entire period, interest rates are not expected to move. And ANZ Roy Morgan consumer confidence fell a further 1% last week, taking it to an 8-week low, with new COVID-19 case numbers continuing to escalate in Melbourne. Economic conditions weakened further, with current economic conditions declining 2.2% and future economic conditions falling 2.7%. And the Reserve Bank has kept the official interest rate anchored at 0.25%, but warned that uncertainty among consumers was a big threat to driving the economic recovery. RBA Governor Philip Lowe said uncertainty has become the big new problem on the horizon for the economy. Less than an hour after his statement was released, Victorian Premier Daniel Andrews announced that Stage 3 restrictions would be imposed for 6 weeks in Melbourne in an effort to control the rapid spread of the pandemic. And ANZ job ads rose by a record 42% in June, dwarfing the previous record monthly increase of 17.7% in February 2010. Week-to-week movements were positive as well, showing consistent improvement throughout the month. This is not overly surprising, given that COVID-19 restrictions continued to ease across most of Australia during June. SEEK noted that the strongest growth in SEEK job ads has been in the hospitality and tourism sector. This is a good sign for at least some of the 381,000 workers in accommodation and food services and arts and recreation who lost employment between February and May. Despite the rebound in June, ANZ job ads were still 41% lower than they were in February, before the pandemic began to impact the labour market. And Woolworths and Coles have backflipped over purchase restrictions on toilet paper and other groceries, reintroducing buying limits removed less than 2 days ago, amid a new outbreak of panic buying in Victoria. After lifting nationwide buying restrictions on all products except toilet paper on Wednesday morning, Woolworths imposed a 2-pack limit on 27 categories including pasta, eggs, fresh milk, sliced bread, frozen food, flour, mince and bacon in Victoria in stores and online. Coles customers shopping in stores and online will be restricted to buying 2 packs of 20 products, including fresh chicken, mince, sugar, rice, fresh and long-life milk and paper towels, and 1 pack of toilet paper. And Australia's major banks have pledged to offer an additional 4-month extension of loan repayment relief scheduled to end in September, though some institutions will try to encourage people back into regular payments. The pledge of support will have banks shoulder the economic burden of a crisis through Christmas and well into 2021, a 6-month period for the first of the 800,000 customers who deferred more than $260 billion worth of loans back in March concludes. The extension will deliver some much-needed relief for Victorian businesses ordered back into lockdown after the coronavirus spike forced Premier Daniel Andrews to return metropolitan Melbourne to stage 3 restrictions from midnight on Wednesday. It comes as Federal Education Minister Dan Tehan said families with children kept at home in lockdown suburbs will be eligible for the waiver of parent gap fees for childcare to replace national measures that end on Sunday. Victorian Premier Daniel Andrews will offer businesses a $5,000 support package and has sought welfare support extensions from Prime Minister Scott Morrison. And Australians are gambling hard during lockdown, with 2 key sets of data revealing a 64 to 105% uplift in those taking a punt. The latest Illion Alpha Beta data from the week beginning June 21st has shown a 64% rise in online gaming, while NAB Economics Data Insights reveal a 105% increase in gambling. Gaming activities recorded the highest increase in spending according to NAB, in front of residential care services and internet publishing and broadcasting, which rose 38% and 26.1% respectively. Meanwhile, online gaming recorded the 3rd biggest surge in spending behind food delivery and furniture and office equipment, which has risen 247 and 92% respectively, according to the Illion data. But the wagering companies say that while online gaming has soared, overall expenditure has declined after government-enforced restrictions shut down the big casinos, major sport codes and poker machine venues. Listed gaming giant Tabcorp, which has stood down about 700 staff, mostly from betting booths that has been forced to close, said the wagering spend has shifted from physical outlets to digital channels. And Qantas has upped the ante on struggling rival Virgin, announcing its 2nd massive fare sale in 2 weeks. From Monday to Friday, Qantas will offer 350,000 discounted fares from $109 one way, with 40 routes available from under $150. It comes after an end-of-financial year sale with low fares partner Jetstar that offered 200,000 heavily discounted airfares and triple frequent flyer points on Qantas bookings. The timing of the latest sale will coincide with Virgin Australia's own ramping up of flights in August and over the September-October school holidays. The rival carrier announced its pushback into the domestic market last Thursday and a comeback sale after an injection of desperately needed funds from new owner Bain Capital. Virgin Australia went into administration on April the 21st with debts of $6.8 billion. And Qantas and Virgin Australia have been warned that they can be called out any time for abuses of market power as a competition watchdog starts tracking airline routes. How exactly airlines choose and manage their aviation routes as borders reopen and more flights take off is being scrutinised by the Australian Competition Consumer Commission. The ACCC was given special powers by Treasurer Josh Frydenberg in June to monitor the prices, costs and profits of domestic air passenger transport services and related goods and services for 3 years and told to report at least quarterly. But it is understood that the watchdog has the authority to call out bad behaviour at any time, not only in quarterly reports, and that it will not hesitate to act if it sees abuses of competition. The ACCC will not monitor individual airfares, but it will watch how airlines adjust capacity on routes they fly, looking for signs of whether they add extra flights to hurt competitors or force them off, which could lead to higher airfares. The competition watchdog is also continuing to investigate Qantas's purchase of a 19.9% stake in Alliance Aviation last year, making it the single biggest shareholder in the regional airline. Alliance competes with Qantas in regional markets and on fly-in, fly-out routes to mining centres. The real test for airlines will come when the government's financial supports and waivers on airport charges and fuel taxes cease. In June, the Commonwealth extended support for airlines until the end of September to help cover the cost of keeping key routes open. It will cover cost shortfalls on regional routes until the end of December. And Virgin's takeover by a US private equity giant could be derailed as the airline's key bondholders lodge a case with the Australian Takeovers Panel, challenging the deal. Those bondholders are Broad Peak Investment Advisors, a hedge fund backed by Singapore's sovereign wealth fund Temasek, and Hong Kong-based Tor Investment Management. They will argue that the circumstances regarding the process conducted by the administrators, Deloitte, are unacceptable and have the effect of precluding an alternative deal being presented to Virgin's creditors at their next meeting in mid-August. Virgin went into voluntary administration in April as the coronavirus pandemic and worldwide travel restrictions destroyed its ability to earn revenue. The airline owes almost $7 billion worth of debt to around 12,000 creditors. On June 26, Bain Capital emerged as a victorious bidder for Virgin and entered into a sale agreement with its administrator, pledging to preserve as many jobs as possible. However, key details about the takeover are shrouded in secrecy, for example the purchase price. Broadpeak and Tor have applied for interim orders from the panel, seeking access to information about the Bain takeover, in particular the terms of the deal. And plasma giant CSL has begun enrolling patients in a phase 2 study for a potential treatment for people with COVID-19 suffering severe respiratory distress. On Monday evening, the company's Philadelphia, Pennsylvania office confirmed approximately 124 adult patients who've tested positive for coronavirus would take part in a randomised trial where they would receive either CSL's monoclonal antibody, CSL312, or a placebo. So CSL312 is also called garadacimab and is an antibody treatment that inhibits a plasma protein, FXLLA. It is hoped the treatment will be useful in preventing the progression of coronavirus once patients experience respiratory distress and could be another tool for doctors to use in the fight against the virus. The $132 billion ASX-listed company has unveiled a range of research projects for the fight against COVID-19 in recent weeks. These include pledging to produce the first runs of a vaccine in development by the University of Queensland if successful, as well as taking part in a global alliance with other blood plasma treatment competitors to develop a treatment using antibodies from recovered patients. And Network 10 lost $227 million in 2019 after big write-downs on its television licences, onerous programming contracts and rights, and heavy investments in its primetime schedule and its advertising sales department. The Viacom CBS-owned network booked a $226.6 million bottom line loss for calendar 2019, according to filings with the Australian Securities Investments Commission. If one-off items are taken out, 10 had an underlying loss after tax of $45.3 million. 10's annual report notes significant investment in primetime shows Dancing with Stars, The Masked Singer and The Amazing Race. Last year also marked for the first year of 10's $20 million a year Melbourne Cup deal after it outbid rival Seven West Media. The 5-year $100 million contract is a mix of cash and contra or free advertising. The year also marked 10 having to set up its own advertising sales team again after it exited Foxtel's multi-channel network venture, which had been selling its ads since 2015. The setup, hiring and building of its own unit required significant investment. And Maurice Blackburn lawyers will push ahead with a lawsuit seeking damages from the Commonwealth Bank for allegedly delaying the transfer of $3.2 billion in customer balances to lower fee products. The law firm is undeterred by finding that the bank did not break the law. The Australian Prudential Regulation Authority last Thursday slapped licence conditions on CBA subsidiary Colonial First State Investments, ordering it to keep better records of how it considered members' best interests when making decisions. An investigation by the watchdog found concerns about the adequacy of internal processes at the bank, but did not conclude it had breached superannuation laws. The probe was sparked by a formal referral from the Hayne Royal Commission, which noted the bank-owned trustee was bound to transfer accrued default payments promptly and did not. Maurice Blackburn managing principal lawyer Ben Slade, who is leading the class action litigation suit against ABA's wealth arm Colonial First State that was filed on October 2019, said he was unfazed by the findings. And a record 1.4 million Australians are relying on food relief organisation Foodbank. Foodbank said the numbers of those needing food relief increased 78% since the pandemic began, with international students, seniors, single parents and temporary visa holdings making up the bulk of new users. The Red Cross, meanwhile, said it was assisting more than 14,000 temporary visa holders compared to about 620 this time last year. Experts warn the number of people needing assistance will increase when government assistance is rolled back in September. And Westpac will pay $8 million to 8,000 employees whose long service leave was underpaid. Australia's second largest lender says the error was uncovered as part of a review into payroll and long service leave arrangements, which found there were issues with both overpayment and underpayment of staff. Those who are overpaid will not be made to repay any money. It's the latest case of underpayment by a large Australian company, following problems at Woolworths, Commonwealth Bank and National Australia Bank. And that's it for this week. And next week I'll be talking to Troy Rernfield from digital agency Increasio. which had set up a website stimulus package to help to arm all Australians with information regarding the recently implemented stimulus packages. Individuals and businesses will be able to locate and easily sort through all applicable support packages offered by the federal and state governments to help ease financial pressures and better navigate the tough times ahead. And I'll be talking to economist Nicholas Gruen, who always has interesting insights. In the meantime, you can find me on Twitter at TalkingBizBLZ, on Facebook and on LinkedIn. And if you want, leave a comment. Wishing you all a safe